The Central Bank of China's ongoing gold buying binge in recent months has piqued the interest of investors throughout the world. In this video, we'll look at recent news on China's gold purchases, the reasons for central banks' interest in gold, and the implications for individual investors, particularly those who have an interest in or possess gold. Let's dive in. Why does China incessantly buy gold? The gold price touched a historic high this week, soaring above the $2,300 mark for the first time. These factors played a significant role in the gold's rise, including geopolitical tensions, expectations of interest rate cuts in the U.S., and China's gold buying. Such factors ignited interest in prospectors and investors, which is why they are the most common. Investors are likely to buy gold when the markets are unstable, and they look at gold as a safe and anti-inflationary asset. The ongoing wars in places like the Middle East and Ukraine have only strengthened the belief that gold is the safest investment, which in turn increases the demand for it. Besides, the inflationary pressure of the post-COVID era has also enhanced the value of the precious metal. The People's Bank of China, the Central Bank of China, has been buying gold on an increasing scale, a trend that is also true of other emerging market central banks. These institutions are likely to use gold as a safe haven asset, as they're looking to increase their gold reserves due to economic shifts and uncertainties globally. The causes of this gold buying spree by China are multiple. One of the main elements of this strategy is its determination to diversify its reserves and lower the degree of dependence on traditional currencies such as the US dollar. Besides, China's strategy of accumulating gold is in line with its long-term economic plans and geopolitical aspirations. Through the enlargement of its gold reserves, China aims to solidify its place in the international financial system and boost its economic durability. What has China been implementing? Since the beginning of 2021, the PBC has been consecutively purchasing gold reserves as indicated by the World Gold Council. In 2023, the People's Bank of China is the only central bank that has bought more gold than any other central banks globally. The World Gold Council reported that China bought 225 metric tons of gold in 2021, which represents around a quarter of the total gold purchase by central banks worldwide. During just the first 2 months of the year, January and February, the PBC boosted its gold reserves by an additional 22 tons. Krishan Gopal, a senior analyst at the World Gold Council, mentioned this in his X, which was previously called Twitter. This means that China's central bank now owns approximately 2,257 tons of gold in its reserves. Besides the actions of PBC, Chinese citizens are very active in buying gold in different forms, including coins, bars, and jewelry. The investment in precious metals is a result of the general setbacks in other investment avenues such as real estate, the yuan currency, and the country's stock market, which have all been affected by recent economic difficulties in the second largest economy of the world. John Reed, the chief market strategist of the World Gold Council, pointed out that the gold purchases by retail investors in China have been very high since the beginning of the year. He talked about the new highs of the gold spot in the domestic Shanghai Gold Exchange. This resurgence in gold demanded by Chinese consumers is prompted by a downturn in the real estate market, which makes many of them rediscover gold's timeless characteristic of being a reliable store of value. What is the reason behind China's buying of gold? China is almost totally dependent on the US dollar for its international trade dealings. The dollar is the world's reserve currency, and most commodities are priced in dollars. Also, more than half of the global trade transactions are done with the greenback. The past 3 decades have seen China become a strong economic force, and as a result, has amassed huge foreign exchange reserves, mostly in dollars. Nevertheless, the Chinese had been realizing the disadvantages of overdependence on the US dollar, and therefore, the PBC has been trying to diversify its reserves. China has been slowing down the rate of its dollar purchases, and the amount of dollar holdings of China has been reduced by about a third since 2011, and now it's around $800 billion according to the data from the United States. This decrease has been the most rapid in the last couple of years, especially after the outbreak of the COVID-19 virus. The purpose of diversification affirms the objective of other member countries in the BRICS, Brazil, Russia, India, China, and South Africa group. These countries altogether are expected to become the major global players by 2050. The BRICS nations have furthermore contemplated the idea of the introduction of a joint currency in the future that could in turn weaken the status of the US dollar as the world's main reserve currency. This strategic move is part of a wider approach aimed at reducing the over-reliance on any particular currency and improving the financial stability on the international scale. The question is, why does China want to get away from the dollar system? BRICS countries, especially China, are getting worried about the US's dollar being used as a tool to keep itself as the world's economic and geopolitical leader. The US dollar's superior status facilitates the country to borrow money at much lower cost than other nations. Moreover, the US is not only using its currency as a tool for diplomacy, but also as a means to impose sanctions on countries such as Russia, Iran, and North Korea. Following Russia's military action in Ukraine in February of 2022, the US and the EU have both announced multiple rounds of sanctions against Moscow. The response of the West was also based on freezing the foreign reserves of the Central Bank of Russia. In addition, the SWIFT payment system, which is used for international money transfers, became the object of the US's pressures. Many Russian banks were expelled from this system. The sanction mechanisms have made central banks all over the world rethink their reserves. As per John Reed, a Bloomberg analyst, such events have also forced many central banks to reconsider their reserve composition. Chinese officials are especially worried that their country could be the next target of the U.S. if tensions between the two countries grow, either in terms of military confrontation or trade disputes. President Xi Jinping has previously stated that China could use force, if necessary, to reclaim Taiwan, an island it considers as part of its territory. Analysts at the World Gold Council anticipate continued gold purchases by central banks in the coming years, signaling that diversification efforts are ongoing. Despite nearly 18 months of consistent buying, China's gold reserves still only constitute around 4% of the total reserves held by the People's Bank of China, significantly below the reserve levels maintained by central banks of developed nations. While some analysts caution that gold prices may be artificially inflated due to speculative trading, central banks like China's continued demand for the precious metal may not necessarily lead to significant price increases. Nonetheless, gold remains distinct from paper currencies due to its intrinsic value as a rare commodity that is challenging to extract. Moreover, gold serves various economic purposes in industries such as electronics, dentistry, healthcare, and defense. Thanks for watching. If you found this video helpful, don't forget to like and subscribe for more updates on finance and investing. We'll see you next time.